joined today by Rob Spadanuda, Managing Director of WestStar Industrial, ASX code WSI. Rob, thanks for your time.
Thanks for having us.
Firstly, WSI is the parent. Can you tell us about the wholly owned subsidiaries?
Yeah, so there's two subsidiaries, one known as All-Type Engineering and Simpec. All-Type Engineering is a business that we acquired a couple of years ago, has a 30-year history, very strong business, very good reputation, and what drew us to the business was the people behind the business. We acquired that circa 2 years ago. Simpec. Simpec is a business that we acquired probably 3 or 4 years ago now, circa 4 years ago. Started out as a smaller business, but as far as the individuals again behind the business, very strong MD that we were very keen to come together with. And Simpec has been going along gangbusters of recent times, yeah.
So if I look at the two businesses, Simpec essentially was a new business built to bring in a team of people, whereas All-Type was a business that had a strong history and team around it. So the two businesses, one is new, but with an established team, and another a very long-standing, incredible business in its own right.
Yeah, that's right. And starting with Simpec, I mean, the personnel involved, very strong MD, Mark Damasi and David Damasi, we came together with, and they have a very strong history of delivering large-scale projects. That's what got us interested in getting involved with Simpec, and since then they've shown that their experience has enabled them to grow that business year on year as we go along. All-Type, 30-year history. So as we matured as a business, we looked for other opportunities to grow the business. We didn't want to just be, I suppose, in one sector. And All-Type was a business that we came across that had a very strong history, very strong people behind it, and a very good reputation. So that was a more mature business when we acquired it, yes.
And in terms of the product offerings or the service offerings and the markets in which they play, how do they differ?
Yeah, I mean, Simpec, I suppose, has an enormous amount of experience in SMP and E&I space for construction services. So having previously delivered large-scale projects, that was the focus for that business. All-Type's history is more in the fabrication space, but as time has gone on, again with a very strong MD, Kelvin, he's managed to grow that business more into also the construction services space as well, but a very, very strong presence in oil and gas and energy, and I suppose from our perspective, that's the diversification that we were interested in as a company.
And while they live under the WSI brand and ownership structure, they are in their own right two very separate businesses.
Yeah, they do. They are very separate, and they're run independently. I suppose they have their own culture, very strong management, which I talk about a lot. They're both people businesses, and I suppose if you were to break them down individually, they don't cannibalise one another, so to speak. And that was very important to us because to grow these businesses, and that's the strategy, is to try and individually grow these businesses. You want them to flourish in their own rights. So slightly different spaces, but starting to come together these days with some shared services. So Simpec might be delivering some work to All-Type and vice versa. Yeah.
And in terms of the brands and the quality of the companies that you now have on your order book, can you talk to those?
Oh, second to none. I mean, we're dealing with tier one companies, and look, you don't just arrive overnight dealing with tier one companies. I think that I go on again about our people have delivered those companies to us. So it's reputational. It's purely reputation. So in the case of Simpec, the reputation of delivering large-scale projects by a strong MD has enabled us to work with those clients. And it's about building the team. So Simpec's worked very strongly around culture and building their team to take on bigger projects. And if you reflect on what they've done in the last 4 years, so to speak, they've grown their revenue year on year. And this year would be another outstanding year for them. Same with All-Type. I think All-Type comes from a traditional fabrication history, but in the modern day, Kelvin is looking at All-Type and the oil and gas space, and his skill set comes from that space. So effectively we're doing a hell of a lot more in that space, water, infrastructure, and it's quite different. the businesses. Yeah.
In terms of the order book, everyone looks for a business such as this. What does the order book look like? What does your order book look like?
Yeah, it's quite exciting at the moment. Look, it hasn't arrived overnight, and I think I'll pre-qualify that by saying that, we have set ourselves up for this over a number of years, and our strategic plans year on year have been met, and growth in revenue and growth in order book comes about by retaining strong people, looking forward to where the current people we have within our organisation and what we can deliver. It's something that hasn't arrived overnight. It's something that we've strived for, and I suppose it comes about by strength in delivering projects, strength in the quality of the projects, delivering them successfully, delivering them on time, and the clients naturally see the performance. And it's that performance that delivers new projects, and it also delivers a larger scale of projects, because as we mature, the size of our projects mature. And so hence in this particular case, in this particular year, we'll talk recently about the Iron Bridge project for Simpec. That hasn't just been an overnight sensation. The company has been developing to that stage. And developing its people to that stage. So the reward is such that it comes about by a strong investment in the people in the early days of the company.
You touched on Iron Bridge. Shareholders in the market generally must look at Iron Bridge with a bit of scepticism. They must look at it and think, here's a company that is small and growing, has delivered multiple contracts in the 10s, 20s, 30s, 40s, and has now bitten a $140+ million contract. There must be, or there's certainly from an external looking in, a belief that it's a risky contract for a business of your size. What do you say about how do you allay that risk?
Yeah, we don't see it that way. I mean, there's always risk in every project, but certainly the choice was ours to take the project on. It's not something, again, that we just sort of fell overnight on and suddenly were awarded a contract. These contracts come about by putting the right teams together. And it's those organisational charts that you put together and you deliver to your client, and your client gets involved and engages with you on a joint strategy to deliver a project. So in this particular case, the people behind the project, this is not their first roadshow. They've delivered many projects like this in the past, and projects that are a lot larger than this particular project as well. So we specifically went out and targeted individuals, along with individuals that we had within the group, to come together before we even looked at bidding the project. And it was that process that enabled us to take it to our client and sit with our client and say, this is the team that we have to be able to deliver this project. And we strongly believe that at that point, when we delivered that team, that's what really awarded us the contract. Yeah.
You're into the contract phase now.
Yeah, we are, yeah.
You can't obviously talk to financials or operational milestones, but are you comfortable and confident in how the project's being delivered?
Very comfortable. We're literally swinging hammers at the moment, and we're working on the project, the project's going to plan at the moment. We're certainly well into it. Recruiting is going very well. I think the project, we've come out and said that the project has the requirement for 500+ people. Certainly from a recruiting perspective, between now and the month of January, we have more than enough people to service the project, and that's what our requirement is at the moment. And we're on site, and it's going to plan very well. Yeah.
So the question always comes to mind when you look at an industrial stock such as WSI with a strong existing pipeline, how much capacity is there to take on more jobs? And if you take on more jobs, are you stretching thin your existing teams to deliver this work, and can it create a risk? So the question I have is, how much capacity do you think sits in the pipeline, and are you confident it won't stretch your teams?
The company's revenue streams, the subsidiaries' revenue streams are quite independent of one another. So we talked earlier about building the companies individually. And I think that as far as the projects themselves go at the moment, Iron Bridge is a large project, but certainly there's some other significantly large projects as well within the group. We're not at capacity. And the reason we're not at capacity is because you compartmentalise workforce expertise on a per job basis. So for example, we'll talk about Iron Bridge. That's set up for success with the right team. If we move to another project, for example, in recent times, All Types announced a large compressor station for APA. that's a totally different skill set and a totally different team. That team has a history of delivering those types of projects, quite different to the other project. So the maturity phase of our growth is what we're seeing at the moment. It hasn't occurred overnight. We've come through a number of years. You would have seen our revenue grow year on year on year, and it continues to do so. So it's that maturity phase that's sort of coming to the fore now, where we're starting to deliver, I suppose, long-term sustained earnings across the group. So the answer to your question, I suppose, yes, we can take on a hell of a lot more work. We're looking at the type of work we're taking on. We're very specific in what we do take on. We're very specific in the type of contracts, and we're very specific in what skill set we can bring to projects.
So you've got the capacity to take on more work. What's the visibility to the pipeline look like?
Yeah, it's very strong. I mean, WA at the moment is quite strong. I think from a visibility perspective, our tender book at the moment is as strong as it's ever been. And as far as new projects go, we, like others, tender a lot of works, but we also, I suppose, are strategically chosen to get involved in projects early. So from a visibility perspective, we do see quite far out. I mean, we can't come out and talk too much about projects at the moment, but certainly if you look on our track record, we're continually delivering projects. I think we're in the month of October, and we've announced circa $210 million worth of work this financial year alone, and we're expecting that to grow. We're continuing to tender works, we're continuing to look at new works, forward works, and the company will continue to grow. Yeah.
As you grow and as you work on these exciting projects, are you seeing your brand attracting more and more of the right people?
Yeah, I think WestStar as a brand, what it's been able to do, particularly for the subsidiaries, is bring the financial strength to the company, bring the governance to the company. And I suppose from a client's perspective, I think the clients reflect on the fact that we're an ASX listed company. And I think that it's that strength that's been brought to the subsidiaries that have enabled the subsidiaries to, Alltype and Simpec, to go off and win bigger work, because we can fund the projects and we do have the facilities to be able to deliver the projects, and certainly across the group we have the skill set, a wide variety of skill set to be able to deliver these projects.
Two strong subsidiaries, a great order book, significant visibility to upcoming work that we hope to get. Rob, exciting times ahead for WSI. Thanks for your time.
Thanks for having us.